specifically crude as it comes off. Scott Bauer is joining us, the CEO of Prosper Trading Academy. Scott, good morning to you. Welcome.
Good morning, Ben.
Good morning. Started off the show talking about the talks this week in Turkey, Istanbul, and we're hearing some good headlines this morning. Putin said that Zelensky meeting is possible ultimately. Well, actually, this looks like it's one of the Russian negotiators saying this, but they're talking about how they could have talks with foreign ministers ultimately, and they're making steps to de-escalate the situation in Ukraine. I mean, ultimately, we've seen crude oil prices come off with the hopes of a ceasefire, originally up around 130 as diplomatic talks have resumed now, and certainly we're seeing that this morning. We just dipped down below 100 here as we speak. We're in a free fall down to $99.91.
I think we would all love to see that, Ben. I mean,
Big time.
That's what the world wants to see. You know, both from a financial and economic standpoint and from a humanitarian standpoint. But I think we have to look at this, quite frankly, with a lot of, I don't want to say skepticism. I want to be optimistic, but I think we have to be realistic about this. And when you're looking at the commodity market, especially across the board, whether you're looking at energy, you're looking at grains, whether you're looking at some of the precious metals, look at the violent moves that we have seen just based on headlines over the last 4 weeks, over the last 6 weeks or so. So I look at this as a trader, and I almost want to fade these moves. And it's not being negative. It's not being pessimistic.
I completely understand.
It's being realistic.
I completely understand, Scott. I mean, we were just talking about some of the intraday volatility, the swings we've seen, the market, how it's been so headline-driven has been one of the themes we've discussed over the last couple of weeks. And, you know, to the point that we're looking at this chart, we still have yet to take out the lows around 93 from the 15th, I think it was, just earlier this month. I mean, this is a significant move lower, but still holding up above a most recent low around that 93.53 level.
No doubt about it. And you know, honing in on oil, you kind of have both things right now front and center. Obviously, Russia, Ukraine is what everybody's really focusing on, but you also have the potential of major demand pullback in China because of these lockdowns. Now, I think the move that we got yesterday was due more to China than it was to the Russia-Ukraine situation. The move that we're seeing this morning is because of the headline talks, and that's what concerns me.
So, Scott, in terms of that, I mean, again, the demand concerns obviously not only tied to China, but when you see rates on the rise to the extent that they have been, at the trajectory they have been, I mean, we talk about how, again, they're kind of more normalizing than necessarily getting to the point where they're too high, so to say, but still at the trajectory or the pace that they've been normalizing, again, amidst these expectations that the Fed's going to have to act a little bit more aggressively than initially expected. I mean, in theory, that kind of puts a little bit of a lid or a bit of a damper on some of that upside potential as well.
No doubt about it. And you're right, Ben. It is the pace at what is going on. I mean, to see the 10-year go basically from 150 to 250 in a matter of, 4 weeks, 6 weeks?
Yeah.
You know, that is just a move that, you know, we have not really seen before. So when you look at it that way, that is really, you know, what is happening. It's not the fact that the 10-year is at 250, which is still historically pretty darn low, obviously not compared to where we've been over the last couple of years. So yes, that is absolutely aiding the massive amount of volatility that we're seeing across the board in the commodity space.
Scott, when you say this is the type of position that you would normally or you'd like to fade, it sounds like you're kind of sitting on your hands under these circumstances. Is it because of some of the intraday volatility, the kind of lack of rhyme and reason as far as price activity when you get this headline news factor coming into play, and or is it, again, just that better opportunities will exist at later times as we just kind of wait and watch some of this dust settle?
Well, it's real hard to look at technicals right now because technicals are not meaning a whole lot. And if you're a trader and you're a technical trader and you base maybe your decisions on 70, 75% technical, 20, 25% fundamental, this is a tough trade right now. You and I have talked about this. I have faded every big rally that we have seen over the last month or two in crude. There was one time I got stopped out, hurt pretty bad, but I got stopped out. The rest of the time, it's worked pretty well. Now I'm starting to look at the other side of it where I almost want to buy into some of these big rips to the downside here. I'm not quite there yet, Ben, but if we start to hit 97, 96 area, I'm heading in and I'm going to be a buyer of crude.
Well, to that point, Scott, we talked about why crude's come off in terms of, well, you mentioned China. We've seen, again, some of the diplomatic pressures ease as far as Ukraine talks, at least temporarily, as far as some of these headlines we're seeing. And then, as mentioned, rates on the rise and the impact, the stifling aspect that has on the economy here in the U.S. and globally for that matter. But then, on the other hand, one of the reasons it seems like price came off is that the kind of worst case Putin scenarios never really developed. The, cutting off Europe kind of talk that we had heard as the U.S. was sort of readying some of the energy products should a worst case scenario type develop. But along those lines, I mean, we're still seeing attacks on a daily basis. They're lobbing bombs back and forth. I mean, Putin, unpredictable character in himself. I mean, this could change dramatically. So I can understand where you're coming from in terms of looking to buy some of these dips potentially.
Absolutely. I just, from a realistic standpoint, I don't see how this stops anytime soon. I hope to God that I'm wrong, and
we all do.
From a humanitarian standpoint, we all do. I just don't see how this stops. But speaking of stops, that's why with every trade I make, I'm using stops. If I'm wrong, okay, I'm wrong, and I obviously live to fight another day, right? Because the market can stay the market can stay more rational than I can stay longer than I can stay solvent, or irrational than I can stay solvent. So that's really the case here. But across the commodity space outside of even energy here, look at what's happening with grains. Also, we saw the massive spike up in wheat, in soybean, some of the others, and now we are seeing many of those commodities now 30-40% off those highs that we just saw just a couple weeks ago.
Yeah, actually, if we could pull the chart here, we've got beans, which are kind of working their way back down towards their 50-day moving average. They've come off significantly from 1760. Again, still relatively elevated, but definitely products to keep an eye on. Scott, anything attracting attention in the metals? I've been watching gold come off this morning. I'm seeing it back down below 1,900 right now. Big move down 2.5%. We're talking $50. I mean, gold got smacked down as well with some of those geopolitical tensions, that unease kind of resolving some. Again, hopefully we'll see continued progress along these lines, but at the very least, gold traders are taking notice at this point.
This is playing out the case that you and I have talked about. Why over the last 2 or 3 months or so, why didn't we see gold rally back to those highs that we saw a year and a half ago? Yes, we got the spike up. What was it, a week, 10 days ago, maybe 2 weeks ago, up towards 2,000. But the scenario for gold was set out there with the risk environment that thing should have been trading at all-time highs. And from a fundamental standpoint, it just didn't follow through. And now we're seeing gold really take it on the chin here. This once it broke 1910, which was a pretty big support level, and now we're down below 1900, Ben. If these talks progress, you could see gold down well below 1850 in a heartbeat here if we get a continuation of positivity coming out of Russia, Ukraine.
Scott, I completely agree from a technical standpoint as well. I mean, we always talk about these ranges that we establish. If you fail to take out the upper extreme on a test, energy through the middle of it, in this instance, again, 1950 to 1850 can accelerate and oftentimes open up a door for a retest of the lower extreme. That lies down around 1700. Scott, in terms of metals, and kind of tying all of this conversation together and coming full circle here, and when you talk about China, some of the COVID lockdowns they've seen there, Shanghai, 25 million people, the largest city ultimately. I mean, we've been talking about, again, rates on the rise. We've been talking about Ukraine and some of the tensions that creates and the impact that has on global economies as well, whether it's crude prices to the upside and that slowing down some of those growth expectations. What should we expect from copper then? That having been said, some more kind of similar situation in terms of what we're seeing in gold, just this range bound, because it would seem like if gold can't break out to the upside as these tensions ease some and some of these concerns arise, copper would seem to be very much kind of in that same boat, kind of stuck in the range.
Absolutely. And if you see a continuation of rates accelerating also, what does that do? How does that feed into overall economies with home building, with home repair, everything that you look at for maybe what copper does? And I think that copper might be in a little bit of trouble here as well, though I am not as bearish on copper and some of the other metals like palladium, platinum, as I am on gold. Those have a little bit different of the risk
Noted.
sentiment to them. So
Closer tie to Russia, Ukraine, the tensions there.
Exactly.
Okay. All right. Well, we've been hearing about the major impact that they have on, again, that market, the supplies associated with. So we'll watch that as well. Scott, that's a great breakdown here this morning, talking commodities in general across the board here, and wanted to get some time to talk about some of the eco data this morning headed our way, the JOLTS numbers, and some of the other data throughout this week, but we're going to have to cut it short there. Scott, appreciate you sharing your Tuesday with us here on the TD Ameritrade Network. Scott Bauer is thanks to you, Scott. Scott Bauer is the CEO of Prosper Trading Academy.